the next step is the tokenized stocks, equities for anybody. It doesn't matter whether it's $1,000 ticket size or $1.
Today, I'm happy to have John Kikko. He is the Director of Business Development at the Hedera Foundation with a special focus on financial markets. John, thank you so much for hopping on today.
Thank you for having me.
Well, it's absolutely my pleasure. To start off, John, why don't you just tell us a little bit about your background and what brought you to Hedera?
Yeah. So definitely been in this space for just only a couple of years. So not an OG by any measure. I joined Hedera only a few months ago, 3 months now. And before this, I was at Fidelity Digital Assets on the custody trading brokerage side, servicing institutional asset managers and folks that are coming into the crypto space through the Fidelity network, as well as kind of direct to large investors, institutional investors. Spent a year and a half there, and then prior to that, I was at Anchorage Digital, another sort of qualified custodian here in the U.S., globally as well. And so I have more of a custody trading kind of background in crypto. And then prior to that, I got into sort of personal trading during the pandemic, actually. So that's when I first bought my Bitcoin, moved to Ethereum, and so on and so forth. And so by any measure, definitely not been in this space for a very long time, but I just fell down that rabbit hole really hard. And I think it really just resonated in so many ways that I just felt that this is the future of finance and that this is an opportunity for somebody like myself that frankly was kind of jaded by the old world and wanted to see something really exciting and where I could bring some of my skill sets and experiences into. And so I dived right deep into the digital asset industry in 2022, which was actually only a week before the Terra Luna UST depeg. And I had no idea what we were getting into at that time. But, fast forward to, 2023, obviously the industry has basically hit rock bottom. In the US, we saw the regional banking crisis, right? With, and also Circle's USDC depegging for a little while. So very scary time with choke point 2.0. And we felt that, the industry was really at, this point of survival and the administration from all the different regulator apparatuses were trying to choke it. Going through that experience though, what I realized very quickly was that we've tried to kill this industry in so many ways, for many, many years. Countries would FUD it. We would have folks saying that, Bitcoin would be banned by all these governments because they can't control it and all these sort of things. And look how far we've come in 2025. But to answer your question directly, sorry if that was a long one.
No, absolutely.
The reason
the
why
more the better.
The reason why I left the sort of custody trading space and wanted to get into more on the foundation on the layer one side, especially at Hedera, was because I saw that this tokenization movement at the time in 2023, I felt the reason why people talked about tokenization, not so much crypto, was because, crypto was a scary word back then. And, if you talk to normies, they're like, oh, crypto, why are you there? They look at you funny. In tokenization, it felt like you were still providing some real world utility applications that people could kind of sink their teeth in. And so at that time, I didn't think it was a whole lot that once the bull market returns, we're going to go back to more DEXs and more meme coins, which it did at an early time. But, what I've noticed as well during that time being an institutional side was that tokenization is something that large banks and asset managers are absolutely keen on deploying. And they believe this is going to be the growth driver for their business. And so when I realized that, I wanted to join a layer one that is really suitable for these types of sort of institutional applications. The large part of it was the governance structure and the fact that these asset managers and folks that are highly regulated, we need to answer, who am I paying my gas fees to? What happens when there's a fork or some sort of lack of consensus on the direction of the chain? What happens when a regulator saying that you cannot send your tokenized security to so-and-so, you need to block it, freeze it, wipe it, all those sort of things. That seems very basic. A lot of these permissionless blockchains, from my understanding, they can't do that, nor will they ever go to a more sort of governance structure that Hedera has. And so Hedera has thought this through from the very beginning and has been working with institutions from day one. from the governance to decentralizing, in a thoughtful way, and really servicing a lot of these folks, enterprises around the world on supply chain management applications, whether it's ESG related applications with AI governance and verification. And I believe now that we have the Genius Act through into law in the US, and we have all these jurisdictions around the world really seeing this as a threat. If the US dollar is going on chain, the implications are massive, and every other sovereign country will need to move their currency on chain, which means that there's more wallets to users, more institutions need to plug in. And so this domino effect is happening real time right now. And so it's really exciting to be at Hedera talking to folks within the financial markets to bring a lot of these things on chain. And it feels like it's happening, over the last couple of months, it feels like it's happening overnight. We've been talking about for years, nothing for a long period of time, and all of a sudden everything at once. And I think 2025 seems to be that time. And I believe in the next 12 to 18 months is absolutely critical for us to be focused on working with these large asset managers and institutions, build those relationships, and really have the ability for us to be connected to this. We're going to be living in an omni-chain or a multi-chain world. And I think Hedera is positioned really well amongst our sort of peers of providing that level of governance and safety and security and sort of robustness that a lot of these folks are looking for. So really excited about that. We obviously had the Swift announcement last week around their ambitions of moving things on chain. What I believe with these large infrastructure players around the world that are looking to do the same, NASDAQ's similar, and all these other sort of large institutions, I believe they're not going to just king make and just use one and that's it. Like, oh, if you're on any other chain, well, tough luck. I believe that they may start to kind of do their own thing in a small sort of, walled garden in type where they can control it and then slowly decentralize that and allow connectivity and interoperability. And so we're at that phase where the Swifts of the world are going to be building their own. I mean, think about JP Morgan Connexus. They started with their own forked Ethereum and they had it all completely permissioned and they're slowly looking to decentralize. I think that sort of evolution will take place all around the world. And Hedera is really kind of there to capture as we start to move from that phase into the sort of decentralized phase of, and then interoperability phase, we're positioned really well. So that's a long, I know I was just supposed to answer one question, so sorry for rambling there.
No, we love it. There were so many things there that resonated from what you said there, from, how you came over, you saw that this was kind of the future. That's similar to what I did. I wasn't already in the financial space, completely different industry, but it was feeling like I was in the 20th century and I wanted to move into the 21st century. Also, the resilience of the crypto market. I think the fact that it's proven it's anti-fragile. And even though you have these dexes and you'll have these fantastic crashes, you mentioned Terra Luna, it still works. There might be massive crashes, but even when it's really stressed, it still works. Now, of course, there's going to be hiccups out there. And, the things about Hedera as well, the governance, we did have a glitch at one point with the smart contract system. It's code. You're always going to have things. But the way they were able to ring fence that and address the issue in a quick way, I think that's really going to speak to the institutions and enterprises out there as well. I would like to talk a lot more about DeFi and TradFi and the crossover between the two. But first, can you tell us just a little bit more about your role and your responsibilities at the Hedera Foundation?
Yeah, absolutely. And maybe before I do that, I think I forgot to mention that before joining the crypto industry in 2022, I've spent 15 years in the traditional finance space, starting at Lehman Brothers. I was doing equity derivatives middle office in 2007. Was there for a short period of time. And then since then, I joined Nomura Securities for a few years. Then went to Morgan Stanley, Bank of America, and I'm here. But throughout that process, I was in the sort of equity derivatives middle office world where we saw contracts having to be managed by humans and ensuring everything's reconciled. The payments are going out to the right accounts. If it's sent to the wrong account, that you have another team that looks into it. And so you have an army of people for just one trade, right? In a structured derivatives contract. But I saw that and then moved it to the prime brokerage space, which was basically securities lending, where you move stocks to one another and you collateralize that. And that was T+2, T+3 before, T+2, and now we're entering T+1. That is only going to shrink, right? And so if you can do real-time collateralization, that would allow freeing up of capital, more velocity of capital, and really understanding who owns one in a legal sort of multi-second legally finality way, which is unheard of in the current sort of structure. And so I've seen all that, and that prepared me to join the Hedera Foundation to focus on financial markets, really on tokenizing securities, commodities, fund vehicles, stablecoin rails to facilitate those payments. And we now have the regulatory clarity. We'll hopefully have the Clarity Act in the US, approved into law in the next, hopefully, weeks, months. And that would, again, be another massive catalyst for a lot of these regulated folks to come in. And so somebody needs to be working with these folks and kind of directing them towards Hedera, because unfortunately, there's no sort of standard RFP process where they go, okay, here's my framework in which I assess layer ones and what I need to do. And I go out to each and every one of them and tell me, okay, respond to this RFP. There's no standard process for that. So you need to actually build those relationships, trust in who you're talking to, and obviously getting to know more of the technology and how that fits. Be able to have informed questions about the technology, because sometimes they are still figuring this out. The compliance risk people don't know what questions to ask around the risk around the technology. So somebody like myself can inform them and help guide them. These are the things you probably need to think about as it relates to compliance with the Basel rules, for example, or for capital requirement reasons and all these sort of things. And so that's the reason why I joined Hedera now. I mentioned earlier why I chose Hedera amongst the others. And also my focus is going to be working with these large institutions around the world to guide them and help them navigate the space, because this is a foreign space. They don't know what the market structure looks like. They don't know what the technology risks are. They don't even know what questions to ask. And so that's my job, to help them. And then I take a barbell approach with that. Is once we have these assets on chain, what we need to demonstrate is that there's utility by bringing this on. So 24 hours, 7 days trading, fractional ownership, democratizing access, and also really to provide collateral mobility. And so we need to have all the right ingredients in our ecosystem for us to do that. And also I work with my partnerships team to ensure that the on and off ramp and the interoperability is seamless, and that we can get liquidity, that we can get distribution. And so there's a lot of components there, but I work alongside my team to make sure all the right pieces are there, so that when we have high quality assets coming into the ecosystem, there are buyers of that. There is use cases for it. And if it's buyers coming outside of Hedera, we want it to be super seamless for them to be able to come in and participate. And so that's the kind of high level.
Yeah, no, it seems like it's super necessary considering the direction that Hedera is going in. Now, the next thing I want to dive into, I want you to have as much freedom as you possibly can. So we were talking about this before, and you wanted to make it clear that you aren't speaking for the Hedera Foundation, that these are just your opinions. And as we dive into the weeds here and getting into some of this stuff, just wanted to make that clear. But
thanks for saying that.
Yeah, absolutely. So is there anything that you're working on right now, or really anything that's happening across the Hedera ecosystem that has you really excited?
Yeah, I'll start with, I think I already touched on this, but working with a lot of the largest, most respected asset managers in the world, to not only simply just putting things on chain, but working with them on the next phases of this evolution of tokenization. And so really just kind of having great relationship with a lot of these folks and continue that movement to bring folks on chain and then kind of develop that over time. The other sleeve is really working with a lot of the traditional finance folks that have a brokerage business or a bank, or they already have a distribution network. We want to ensure that we can help them improve their operational efficiencies and tap into new markets by plugging in Hedera on the back end. So there's that sort of B2B sort of component to that. And then what I'm excited about, I think a lot of people ask what the killer use case for tokenization is. A lot of folks thought it was real estate or some sort of illiquid asset that we can create liquidity. I think that over the past years, it's proven that it's very difficult to create liquidity on an illiquid instrument, even though you bring this on chain. And so I think that might take a little longer. And so, we've seen the success of money market funds because they're very easy to understand. It served the various treasuries on chain to diversify and get some level of capital preservation. But I think that the next step is the tokenized stocks, equities, because it is, again, simple. It does offer all the benefits that we just touched on about 24/7, democratizing access. And, the US equities market, for example, I think like 70% of the world's equity investor has exposure to the US. And that's probably coming from more an affluent group of folks in the world. And so we want to be able to allow access to high quality, publicly traded companies for anybody. It doesn't matter whether it's $1,000 ticket size or $1, because the current stock market structure, there is no fractional ownership of an Amazon stock. The only time you get half price on it is when its stock splits.
Sure.
And so by doing so, it does solve a lot of those problems. And Swarm is a really exciting project that we announced only recently about them deploying on Hedera, providing tokenized equity trading in a compliant way. And I think this space will massively expand, and we're excited about that.
I think you're absolutely right. And of course, I had that interview with Philip from Swarm and Hanya, and it was really kind of an aha moment for me on a few different fronts. But one of the things I always saw that, DEXs and NFT, and my audience is going to recognize this because I've said this before, but NFTs and DEXs, the marketplaces around those, we're going to serve as proof of concepts for smaller exchanges. And, we're starting to see that with the Nairobi Securities Exchange and the Kenyan Digital Exchange. And then the big boys, the NASDAQs and the FTSEs and the Nikkeis, they were all going to look to that as a proof of concept and tokenize their assets and use this infrastructure as well. Now I'm not so sure, or I'm not so sure what the future is going to look like, because DEXs, if you can make the assets DeFi ready and they can come directly over through a platform like Swarm and trade on Saucerswap or any of the other DEXs out there, they could be direct competitors for the NASDAQs and the New York Stock Exchange, Texas Stock Exchange, and so forth. What are your thoughts about how the future is going to look, several years down the line?
Yeah, I think the direction of the centralized players like NASDAQ, for example, I think the share in terms of the amount of trading volumes will over time decrease. I think they're doing this tokenization movement as a defensive mechanism because they're afraid that the flows of capital will go away from them if they don't go on chain. So I think what we're going to see is the NASDAQs of the world in the back end operationalize on blockchain rails, allowing 24/7 access and all these other benefits, thereby passing down the costs to the broker dealers and the sub brokers. And we still have the legacy market structure that gates access, that takes rent, and is serving their own distribution that may not be accessible to folks in parts of Africa or other emerging markets. And so I think we'll see that capital that wanted to come through the sort of existing channels into NASDAQ now being able to say, hey, I could do this in a permissionless way, maybe even find better price discovery at different parts of the time around the world and access high quality price performance. Or even I think we'll enter a world where we get dividends through on-chain directly to your wallet. We have the ability to vote for any sort of corporate action directly in your wallet instead of getting serviced an email or serviced a letter saying, hey, you have to respond. I think all this will be digitized and this will be all accessible around the world. It doesn't matter where you're going to be. And so I'm excited about as more and more sort of younger folks come to the digital world and they expect the world to be digital to begin with, and rather having to go to, sort of traditional broker dealer and opening up an account or going online and doing that with these brands that were obviously important in the generation that we're in right now and maybe the ones before, but the newer generations are going to be very comfortable with their own wallet or some new fintech or neobank that allows you all this access to stocks and bonds and all these other financial instruments. And I think what we're going to start to see, these are the building blocks. We're creating these building blocks of tokenized stocks and tokenized money market funds and things like that. What we're going to eventually do is have the ability to customize exactly based on your risk tolerance, your income, your cash flow needs, and all this and your sort of retirement goals, and be able to customize all that with all the tokenized building blocks and be able to create custom sort of portfolios that historically have been very cost prohibitive to have it super customized for somebody that has like only $50,000 in their bank account, right? That was only allow for high net worth that has $50 million plus. So it's democratizing access to high quality, highly tailored financial solutions. And so that's what I'm excited about.
You're hitting the nail on the head. And I think as we move down this road, as the big exchanges start to adopt this technology and, the DEXs and everything else, Hedera's properties are really going to work well. The things that we have competitors, that are fast, but the true finality, no MEV, no front running, the ABFT security. These are the kind of things that are really unique to Hedera that I think are going to make them stand out. And where they might not be super important for a DGen right now, they are going to be super important when, the institutions start moving into the space. Now, of course, we were talking a little bit about this before we jumped on camera, but you brought up something there that I have gotten a question about. These assets that have payments coming from them in the form of dividends or bonds with coupon payments, how are those actually going to be distributed? And, in my mind, initially that was going to be through somebody like Swarm. You go on there, you KYC, they know this is your account, it's tied to this person, and they would be able to distribute it. And of course, that could be a business model where they could take their cut of that. But I think eventually, like you were saying, we could have where you have that KYC tag on each of one of the accounts, and it just gets scanned. And if you're holding this stock, you get this dividend. If you're holding this bond, you get this coupon payment, things along those lines. Are people already starting to think about how to solve those things? Or are we just too early right now to figure those things out right now?
I think we're still early,
Okay.
but that technology is there. I think it's more about the orchestration of how to get this done in a compliant way. But you're absolutely right. If you think about it, the old way, if you have to issue a stock dividend and you have to give a mailing for whatever reason, you have rules where you have to have physical letters sent to the recipient. And what if they changed addresses and that mail never gets there and it bounces and they have to figure out where it's going to? And so you can imagine the amount of operational burden that the current system has. But instead, if you already know where the wallet address is, you could airdrop that dividend directly. Right. And so you can actually streamline that entire operation. And so the technology is there to do it. I think it's more around putting into law of like, can I actually do it? Is the question. Am I getting in trouble if I do that? And so we're going through that phase of getting the sign off and the regulators comfortable with that setup, our compliance and risk folks across this, because at the end of the day, there's still the existing infrastructure that is still tracks who owns what on off-chain ledgers, and that needs to translate into on-chain experiences. And so there's still going to be that friction unless everything is moved on-chain. That's when we'll see the true benefits of being able to do that direct to consumer. So that's why I say we're early. But what we can vision is we can come up with phases in between that, because those are the end states, perhaps, right? We've got the complete off-chain to completely on-chain states. Along the way, we're going to have somebody like Swarm figure out how to do this in that direction. And so maybe it's not a direct from the source, whoever's holding the ledger of who owns what, directly sending a dividend payment on chain. It might be a message to an agent that receives it on your behalf, and then they were able to then send you a stablecoin payment or some sort of tokenized representation of that dividend to your wallet using the on-chain rails. Right. And so that could be kind of, halfway point or just like a step towards that. So, yeah, we're going to see all this happening, I think, in the next couple of weeks or months. So it's exciting.
I completely agree. And all of those things that you were talking about, there's immediate solutions there. We talked about the KYC flag. You can have, if you have to send them a notification, that could be done in a memo. That could be done if it's several pages or something like that. It could be done in the form of an NFT. So all of those things can be solved. And, with self-custody is certainly something people appreciate, but the near instant finality, you were talking about settlement plus days. And of course, we have settlement in a few seconds. So those things and the efficiencies, those are going to make this the rails of the financial markets of the future. But this has been a great conversation, John. I've really enjoyed it. Is there anything else you'd like to touch on before we let you go?
Yeah. So I think a lot of folks are also ask, like, how do we make of this world where we see all these competing layer ones? Stablecoin issuers are building their own layer one. Swift wants to do their own sort of project. I think that's kind of been the trend of late. And how is Hedera positioned? And the way I think about it, and again, thanks for the disclaimer earlier, my view is that Hedera could be the superhighway that is the interoperability layer that connects all these fragmented layer ones around, because at the end of the day, they need a layer that they could trust, that is well documented in terms of how it's governed, that has all the qualities you mentioned from a technical standpoint, right? Very quick, very secure, multi-second finality, all those sort of things, no front running of blocks, and all these sort of elements that it seems to me that it's been lost from the crypto community at large. They're like, oh, no, it's fine. We're fine with MEV and all the stuff, as long as we have, like liquidity and all these things. But I think the institutions are going to think about it completely different. They don't really care whether the TVL number is this much or how many tokens have launched per day, per second basis. They're looking at more on, how do I ensure that when the worst thing happens, that there is a clear, documented, auditable approach in solving that sort of lack of consensus. And Hedera offers that governance framework that all stakeholders can get comfortable around. So we can truly be that bridge across all these sort of things. Meanwhile, we want to build this Hedera ecosystem in a way that's so exciting that people want to come to us, rather than saying, okay, you got the technology, we want to plug you in. But our focus right now at the foundation is, let's bring high quality apps, really great experiences, make that experience seamless so that they can bridge, interoperate, and on and off ramp easily. And our goal is, in my area, is let's bring the high quality asset issuers and products on chain, but also at the same time support the ecosystem in which that can provide utility and benefits to the user. So that's the way we're doing it.
Well, I love the vision. And John, like I said, I love this conversation. I appreciate you coming on today, telling us all about it. And I'm looking forward to having you back soon.
Thank you. Thanks for having me, Ian.
I'm now posting these interviews of Hedera builders independently to my channel. The community, influencers, and media outlets are free to use this content to spread the word on what's being built on Hedera. Once they're all uploaded, you'll be able to go to my channel and search for whatever topic or team you're interested in to find more information. Or you'll be able to get the most recent Hedera news by watching the latest HBAR weekly update. So check them out.